Good morning, everybody. Welcome to today's pre-market prep session. Happy Friday Eve. What is this, January 25th, 2024? And I'm your host, as I am every single morning for the pre-market prep session every day as we scale that mountain, the mountain of markets, and we watch the sunrise over the horizon when we get that opening bell and we go to work, right? But it's important to understand that you got to prepare yourself for work. You got to know what you're going into each and every day, right? You got to know if you're working at Nordstrom, is the holiday season. Things could be really busy, or hey, it's the dry season. A lot of people out of town. Maybe it's 4th of July. All of that, influences your expectations when you go into work. It's the same thing with markets. That's the biggest thing that people fall short on, is not having the correct expectations when that opening bell happens. If you think it's time to start ripping and running, and the market does not think it's time, you will blow that account. And then if you don't know when it's time for you to be out in the market ripping and running like the past 2 weeks, and then you come in and you miss that and you still think you're on that vibe, that's also how you blow an account, right? So let's make sure that we are constantly investing in ourselves, getting 1% better, right? Throw that one in the chat signifying your intention to do just that. But getting 1% better each and every day. And part of that is by setting the correct expectations, getting that game plan together so that by the time the bell rings, you know what to expect. You're ready to rock and roll, right, and execute to the best of your ability. So in terms of our top news, let's dive into it here today. In need of a charge, is Elon Musk spending too much time shoring up the growth of X and not enough on Tesla? Investors might be thinking that in the aftermath of its latest earnings, with Tesla shares sliding 6% in after-hours trading on Wednesday to fall under $200. In fact, Tesla is the only Magnificent Seven member to not make significant strides back to all-time highs seen in November 2021. When the electric car maker hit nearly $410 a share and had a market cap of $1.3 trillion. It's now valued at only $660 billion only. Snapshot, check out the latest earnings, production figures, cash flow, and margins here, and they link a newsletter. But there are even bigger concerns about what those numbers might look like in the near future. Tesla warned that vehicle volume growth may be notably lower this year as the company is between two major growth waves. One that began with the global expansion of Model 3 and Y, and the next, which will happen in the second half of 2025, following the launch of the next generation vehicle platform. Now, other worrying statements, other than the fact that people are just being, extremely petty here this morning, other worrying statements were also made by Elon Musk on the post-earnings conference call, especially after the rounds of price cuts aimed at boosting sales volumes. Automotive gross margin, ex regulatory credits. Quote, we have lots of people who want to buy our car but simply cannot afford it. If the interest rates come down quickly, I think margins will be good. And if they don't come down quickly, they won't be that good. Full self-driving agreements, I think interest rates are going to drop by March. So I think on that front, they should see some positive, forces in lieu of their favor. Full self-driving agreements, I really think lots of car companies should be asking for FSD licenses. And we've had some tentative conversations, but I think they don't believe it's real quite yet. And then in terms of the Cybertruck, it's important to emphasize that this is very much a production constrained situation, not a demand constrained situation. And obviously we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for early delivery. So these are just kind of important finer points that were discussed over the course of the earnings call. Pushing to robotics, I think we've got a good chance of shipping some number of Optimus units next year. But like I said, this is a brand new product. When there's a lot of uncertainty in your uncharted territory, it's obviously impossible to make a precise prediction. And then 25% voting control. So I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. But if I have so little influence over the company at that stage, I could sort of be voted out by some sort of random shareholder advisory firm. I want to have enough to be influential. Like if we could do a dual class stock, that would be ideal. Which I don't really blame Musk for, regardless of if you like him or if you hate him. If I'm in his shoes at such a pivotal point in the company's history, I am not leaving that up to the fact that I could be voted out. It happens all the time, and it happens way too often where founders are pushed out of their own company. And this is that type of pivot where that could happen, right? He's not going to go create a robotics empire or, infuse those robots with artificial intelligence that's next level. And then, he gets voted out and some, idiot causes the apocalypse or something like that. So not saying that he couldn't be that idiot, but if I'm the one who's starting the company, I'm not going to take it up that next notch if I know it could be, kind of swept out from underneath me. But those are really the major headwinds, and the major ideas that Tesla is facing and that they have to address coming into this year, right? It's that push into robotics, the 25% voting control, that competition from China, the Cybertruck issues with the supply constraints, full self-driving agreements, and then, people buying more Teslas because of interest rates dropping. That's really what they're trying to look forward to. But yeah, stock down, sliding 6% there after hours. I don't know what the implied move was, but again, even if you had puts, you'd still get crushed and not make money despite the stock going down if the move was not larger than the implied move, right? It's like if you have, I don't know, it's like if you have a lottery ticket, a tiered lottery ticket, and the max win pays out a hundred grand, and then the minimum win pays out 10K, but they cost 12K. That's what it is when you play earnings and you don't get a big enough move and you still get the right direction. It costs you more to play that game and you didn't get a big enough move, right? You didn't get a high enough win in order for it to actually pay off. In terms of Seeking Alpha commentary, quote, Tesla is too expensive, writes Jonathan Weber, analyst at Seeking Alpha Investing Group Cashflow Club. Quote, apart from that, we have a strong brand and a profitable EV business, but growth is weak or non-existent in real terms. Profits are declining, and Tesla trades at roughly 150x free cash flow. Tesla has potential in autonomous vehicle tech, but I believe that this is a risky bet and would not buy Tesla stock based solely on this reason. Yeah, I don't, blame him about not buying it solely for that reason, but Tesla's something that's been overvalued for its whole existence. So it's some things are just like that, right? It's like, I don't know, Patrick Mahomes or Steph Curry. It's like this guy can't keep doing this, but then they do, right? Some people just defy the odds. And I think you just accept that as the new normal. In terms of aviation news, and also in terms of kind of Tesla selling off on earnings, we'll keep an eye on it to see if it's worth implementing our post earnings strategy. We have a strategy that we use for companies after they report earnings to still kind of scrape up value from them, and sometimes it pays even more than what it did to play the earnings. So that's something that's on the table here this morning as Tesla gets this 6% haircut off the top of its valuation. In terms of aviation, another setback in the latest blow to Boeing, ticker BA. The FAA will not allow the aerospace giant to expand production of its 737 MAX aircraft. The agency's decision comes in the wake of a January 5th incident in which the door plug of an Alaska Airlines MAX 9 blew off the fuselage in midair, leading to all MAX 9s in the U.S. being grounded. Quote, we will not agree to any request from Boeing for an expansion in production or approve additional production lines for the 737 MAX until we are satisfied that the quality control issues uncovered are resolved, said FAA Administrator Mike Whitaker. Meanwhile, Alaska Airlines said that it anticipates it will resume MAX 9 flights on January 26, while United Airlines, ticker UAL, said its MAX 9s will take to the skies again on January 28th. So it's just kind of ongoing bad news for Boeing. But again, Boeing is just one of those stocks that I don't like to trade at all, right? I don't like to trade it. I'd rather just Boeing sit there, and if it dies, right, just like Rocky, if he dies, he dies. But I don't really know if I want any part of it. Just because there's better stocks out there to trade to behave themselves a little bit more. Now, in terms of stock news, up and away, propelled by optimism over its artificial intelligence progress, Microsoft's market cap struck the $3 trillion mark on Wednesday, 6 days before its next quarterly earnings report. Microsoft is now the second tech giant in the last year to surpass the $3 trillion milestone, with Apple doing so last June to become the world's most valuable company. Many analysts are impressed by Microsoft, noting the upside to growth offered by its AI products and expect a, quote, a solid beat and raise when the tech firm reports results on January 30th. Investing group leader Daniel Jones also feels Microsoft is, quote, one of the true growth prospects that can achieve enough growth on the bottom line to justify the lofty price that the market is demanding. So high expectations going into earnings. I hope they can meet them, right, because they are very high, but with them being on the forefront, this is that thing where Microsoft can edge out Apple, right? ChatGPT and leading the way when it comes to AI. Apple led the way in terms of technological innovation and really changing the world with its app store. And Microsoft is now leading the way with its, AI GPT store, right? That is what changes the world when you go from apps to AI apps, that is the game changer, right? And now we've got AI apps that are taking over. In terms of news about the broader economy, defying recession. While the U.S. economic growth is expected to have moderated toward the ends of last year, strong consumer spending and hiring are likely to keep quelling any fears of a recession. Economic forecasts show, or excuse me, economists forecast that the GDP grew 2% in Q4 sequentially, moderating from Q3's 4.9% pace. The latest report from the Department of Commerce will come today at 8:30 a.m. Eastern Standard Time. But if GDP growth comes in stronger than expected, analysts believe it could further cool hopes for a March rate cut. Note that consumers remain resilient with better than expected retail sales in December and consumer sentiment now at its highest level since mid-2021. Yeah, and we actually got data here this morning. So let's check that out and see what we got going on. Remember, Thursday and Friday are big data days this week. Relatively empty first half of the week, but the second half is really when we start turning up. So US GDP actual 3.3% versus 4.9% previous. The estimated was 2%. So we smashed that in terms of GDP numbers. That is quite bullish going into today. So that's the big headline. It wasn't a small beat. It wasn't like we expected 2%. We got 2.3. We expected 2% and we got 3.3% in terms of GDP growth in Q4. So that, very bullish. U.S. jobless claims up 25,000 to 214K. They expected 199K, so that's worse than expected. But I surmise or I expect that the GDP data is going to outweigh any of that data for sure. Like that is a banging GDP number for us to have coming into today. So, and you can see here that the market, if you have Thinkorswim open, the market responded to that information by popping 6 to 487.35. Yeah, I'd say likes that bit of information. Because of that and that everything changing, I'm gonna skip over today's markets because everything is pretty much different at this point. But today's economic calendar, 8:30 a.m., which we just had, we got the GDP data, initial jobless claims, we got those. New home sales at 10 a.m. Not anything on the calendar here during the market day after the bell rings that will be too important, too impactful when it comes to price action. So we'll finish up here with our rapid fire stock news rundown. So what else is happening? IBM, ticker IBM, gains on earnings beat, strong cash flow outlook. Biden delays decision on largest U.S. LNG export terminal. AT&T slides on weak profit forecast, increased spending. HPE, ticker HPE, reports cyber attack carried out by Midnight Blizzard. Spirit tumbles. Citi says JetBlue deal seems unlikely. These airline deals are not going to work, right? Under this administration, there have really not been any merger and acquisition deals that have taken place because that's just how it is, right? So anytime you hear news about, oh, this deal is going to happen, this deal is going to happen, it's probably not going to happen. And that's important to factor into your investing decisions. I don't know if anybody's out here buying up Spirit Airlines other than, Dave Portnoy. But at the end of the day, when you hear these companies, oh, this one's going to get acquired by this one, if it's high profile, it probably will not happen. In terms of Intel, right, INTC opens chip manufacturing factory in New Mexico. Paramount gains as David Ellison makes bid for parent firm. Citi places PayPal on 30-day negative catalyst watch. That's interesting. I wonder what that means. Like if they're expecting some type of negative catalyst to happen, with PayPal or what. But PayPal has paid us quite handsomely. If you check over there on Instagram, hundreds of % profit, overnight on PayPal. I ain't mad at it at all. So at this point, it can do whatever it wants, but we made that money to the upside. We can make it to the downside too if PayPal wants to give us some of that. Most definitely. And then Kimberly-Clark, ticker KB, profit hit by hyperinflationary markets. Then CSX, ticker CSX, profit declines on lower coal prices and surcharges. So that'll wrap us up. Put a bow on it this morning, guys. Take us out. It's been a great week, right? Obviously not as intensely fire as last week, but expected. We got a nice 40% profit out of Airbnb yesterday on those swings, SPY call swings, that you've carried over from last week. Those have paid nicely, sitting at roughly over 200% profit. So, there's a lot to take advantage of. Yesterday, Disney puts came through on the peak above and fail, QQQ, we got paid both ways, right? Quick put scalps in the morning and then calls in the afternoon, almost a price target number 2. So yeah, the market is paying, right? And it's important to understand that you've got to manage your expectations each and every time. You got to operate in patience, right? The market owes us nothing. But if you want replicable success, right? Success that you can replicate over and over and over again, you could go place a trade. You made $10,000. In the grand scheme of your life, that will do nothing, right? 10K will probably help you have a nice month, maybe a nice 2 months. But overall, that money is going to be transitory if you cannot replicate it, right? And that's what this community is about. So if you're not involved with us, don't miss out on the rest of the 11 months that we have coming up in this year, because January was absolutely killer. I mean, in terms of call outs, netting well over 30K in call outs just for the month of January. Like it was absolutely insane. Like just AMD, Nvidia, Disney, PayPal, right? You name it. Marvell, SPY, QQQ. It was just boom, 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 boom. Home run, home run, home run. And we have a very rare occurrence with interest rates decreasing that allows for a ton of opportunity. There's always opportunity in markets, but there's rare like layups, right? There are rare times you say, I want ice cream, and an ice cream truck drives by. With interest rates set to likely decrease in March because that bank term funding program, those loans having to get paid back. With that happening, you have a rare opportunity to catch the run that a lot of stocks will have from breaking weekly downtrends to all-time highs, right? Just like on Nvidia, when it broke that downtrend, right? Those calls, 700 something bucks to $12,500 per contract, right? Except now these contracts are even cheaper in these sectors that we're looking at. So make sure that you don't miss out on that, because it's a literal gold rush that's even easier than anything else you can do in markets. It's not day trades. You go, you hop in these longs, you wait 3 months, you come back to a lot more profit, right? That is the key right there, to make sure that your money's working as hard as you are each and every day. That's different. That's different. So let's be different in 2024. Let's make great things happen. Make sure you're back here tomorrow morning for our next pre-market prep session of the week, and have a good one. And if you're not out here making money with us in markets, DM me on Instagram. Reach out via email. Let's get you educated and get you rocking and rolling and trading with us, right? Have a great rest of the day, everybody. I'll see you later. Peace.